Ethan Premock, stock index futures and equity option strategist and Hamzei Analytics. How you doing this morning, Ethan? I'm sure you like seeing all this red on the board.
I sure do. It's definitely good to see a nice change.
And so, how are things going? Is Faria behaving himself over there?
Of course he is. He
Okay.
definitely is.
All right. We know you like to follow the e-minis, and what I'm going to do is I'm going to bring up the chart that you showed that you sent over to us this morning, and getting a view of it here. Could you just go point out to our listeners what you're looking at here and what you're thinking about?
Well, are you talking about the current chart or the macro chart? Oh, the macro one. Okay. I see it. I see what you got up there. Okay. Well, let me start off by saying that there were two reasons why I was aggressively buying puts in 2014, index puts. The first was late 2011 was the last year the stock market saw a macro ABC pattern, which is a first leg down followed by a short-lived, some sort of dead cat bounce to form a macro lower high before the next leg or flush lower. Every pullback since late 2011 have all had a V-shaped recovery. Now, the second reason was as I watched indexes making new highs in 2014, I also took note to many stocks, including many leaders, were not making new highs with the indexes. And in the old days, or actually I should say pre the central bank stimulus era, that was an easy signal to definitely cover long exposure and possibly get long. Unfortunately, the market is now trained that fear of missing out is the new risk rather than the importance of true risk management. And until reality returns to the market, fear of missing out will continue to lead to more V-shapes. However, until the market had some sort of macro ABC pattern, I had zero interest in being long-term, pretty much anything. Now, I did do well with my index puts in October, but after the Bullard V-shape in October, I decided to change my strategy a bit, especially going into the Thanksgiving and Christmas holiday slow time in the market, to only day trade ES and SPY and only engage in some longer-term high beta strategies. Now, so far in 2015, and definitely the entire month of February, it's really no different than 2014, where the index were making new highs, where many stocks did not. Now, the chart I shared with you this morning is actually, yeah, right there. Okay, what I'm saying, I'm not saying today is the start of this macro ABC pattern, but the chart is a volume flow chart that shows the market holding a range just under 800 points during the 12 years before QE3, which includes the dot-com bubble and also the housing bubble. And since the hope of QE3 back in mid-2003, ES has that same range of about a little over 700 points in just 2.5 years. The chart shows an extremely thin profile during the entire QE3 plus 700 point move, which suggests that when the time comes, and like I said, I'm not saying to start today, but just when the time comes, there is a high chance to fill that thin profile all the way down to the next high volume balanced area, which would be in the 1500s. So a macro ABC pattern, which I would like to see breach the October low of 2014, go up and test it, and if that holds, you'll increase the chances of pushing all the way down to about the 1600, 1500 in the ES.
Okay, so you had a rough February pretty much, right? Because the market just kind of hung up there, and if you're buying, out of the money strangles, you're probably just losing the premium on those things, correct?
Well, I actually changed my strangle strategy a little bit, and I'm using much longer-term options now. I'm actually out to June and September in some strangles because of exactly what you just said. When the SPY or ES was holding in that range for all of January and most of February, I knew there was very low chance of the market exploding higher And if it didn't go lower, it could be some time before any big moves were coming. So I went out with longer term strangles that really aren't being affected right now or under the water right now in any way, just because of I go out much longer term. Now I was in a Tesla strangle back in the end of 2014 that I went into March expiration, and I actually took a little hit on those because I ran out of time and I just had to close it. But every other one that I'm doing, I now have June and September expiration, so I'm okay with those kind of strangles.
Great point there, Ethan. A lot of times we talk about expanding your time horizons, not competing with the high frequency traders, and giving you a chance a little bit longer to be right. So, kind of after a okay February here, you're getting a big windfall here. How often the SPOOs were down over 20 at one point. Is it, do you try and trade around your position here, maybe book a few profits, or, are you just longer term positions here? This is not the kind of the move you're looking for. You're holding on for more.
No, I actually am not aggressively into a lot of longer term puts right now as I was in 2014. I do have a few, but I'm primarily just focusing on day trading, the ES and SPY, and sticking with that right now until the market has some sort of macro move to the downside. But for today, what I'm going to be doing is possibly, yes, looking for a usual bounce after a big pre-market move on the bearish side, which usually has some sort of bounce every time. But I'm going to look for that bounce to stop somewhere at or near or below yesterday's value area. And if it holds below value, I will turn more on the bearish bias for the rest of the day and look to get short. So I might look to get long at first and then see what happens at or near value. And if value holds, I'm going to have a bearish bias for the rest of the day, which is what I actually did on Friday as well. We used the value area to confirm to stay short most of the day or hold a short bias while the market held below value, and that could very well happen again today.
Ethan, I want to talk to you about some specific movers we've got going on this morning. Of course, Apple had its huge event yesterday talking about the watch, the MacBook, this new healthcare research they're getting into. Do you have any interest in Apple right now?
Not right now. Apple is one stock that I want to have on my long-term list. But as I said, I really just don't have any interest in getting long-term any stocks, but Apple is one that I want to for the fundamental side of Apple. But right now, if anything, I would be technically trading it short term, and I'm actually bearish while it's below 27.30. Excuse me. That is basically last week's the bottom of last week's value area, and it's also a trend line, a down trend line as well. So until it's above 127.30. I'm going to be looking for trades, either day trades or a short-term swing on the downside. And if it breaks below 125.30, it will confirm more downside because the profile is extremely thin below 125.35, which actually will put, if I was short below 125.35, I'm going to be targeting 120.40.
Good levels there. So this is one you actually want to put in your portfolio long.
Long term, but I'm not. I have no interest in doing so until the market has some sort of ABC pattern or macro ABC pattern pullback rather than a usual V shape. I want to see that flush in the market come, and then I'm going to get my list out for buying some long term stocks like Twitter, Apple, and possibly Tesla as well.
Okay, we're going to go rapid fire here with a few stocks, and they're tough one. I'm sure you have your charts up in front of you. Lumber Liquidators, LL here. Where are you stepping out to buy it?
Let me take a look. Hold on. LL?
Yeah.
Okay.
And what you're looking at is a daily chart. That's not a weekly or a monthly or a 10-year chart.
Okay, well, for Lumber Liquidators, I cannot get bullish until it is at least above 32.30 and holding above there. Until it's below there, I would stay short this stock. Even if it gets above there, it still has some work to do, which the next spot would be 35.35. But really, until it is above, actually, let me change that. 3270. Until it's above 3270, I would have no interest in long this stock. Maybe if it goes up in that area, maybe even a possible short, because it looks like it breaks 2710-ish, 2710, it's going to go much lower.
You know, you don't know how many times that strategy of not buying an issue or getting active on the long side, picking a much higher point, has kept me out of things. Because a lot of
Yes,
times I never
absolutely.
go back to it. Okay, another chart that's not so pretty, but a much talked about stock here, GoPro, GPRO.
GPRO, okay. I actually just closed out a long on GPRO, which I took off Hamzei's OTF chart. Trade lasted about 2 days. It was a quick in and out, but for now, I have no position in it. But for me, it needs to get back above
40.
39. 39.65 before I can consider getting long this stock. Now it's down too far for me to short. And I actually got a funny story about GoPro. Back when it was trading in the 90s, I tweeted that I was considering a short on GoPro in the 92, 94 zone. And I put on that short. And when I tweeted that, you will not believe the hate tweets that I got for that tweet and how stupid I was to even think such a thing. And I rode that short all the way down to the 70s, or scale down in the 70s and scale down in the 60s. And look at it now, all the way down in the 30s. But I didn't have the short all the way down here. But I probably would not get short this stock until a decent bounce, at a well mapped out level. But I also can't get long until it is first above 39.65.
People get mean on Twitter. There's tons of hate tweets if you say something about the wrong stock. Let's move over to biotech. What about Gilead Sciences, GILD?
GILD. Okay, I actually have a strangle on this one right now.
Okay, tell us about it. Tell us when you put it on, what your strikes are, and what you're looking for.
Okay, give me 1 second.
Yeah, I'm throwing a lot at you here. Sorry. Meanwhile,
right, no
we were
problem.
talking about this one yesterday with Anne-Marie Band, and she's real good. She likes this stock long term. What I was looking at in yesterday's trading was, you had that support level at 10060. You actually had a double bottom there. And, the 10170 level is what I was looking at. Low on Friday, low on Wednesday. Couldn't hold it yesterday. Got a nice dip on it. I still think that, I just don't like the way this chart looks between 95 and change and 100.
Yeah, I would actually be a little bit more on the bearish side right currently. It's below, let me have a quick look here. Well, it's below 101.90, and definitely, it's below the 103-ish area. Now, I put this, if you look at the chart, you can see it consolidated for most of February. And the last time we spoke, I talked to you about I look for a tight range of consolidation to get into the strangles. So sometime in February, I got in the mid 103s, and I put on the August 97.50 puts, strangled with the August 1010 calls. So I'm looking for a move below 97.75 for the put side to really kick in, or a move above let me give me 1 second here. 106.11 or so for the calls to really kick in. But it looks like it's going to head down to the 97 area, and if that area holds, I have plenty of time with the August strangle if it goes back up. But if it breaks that 97.70 area, I'm going to probably be able to capitalize on the put side of the strangle.
Okay, one more macro question for you before we let you go. You were talking about the 1600 level on the S&P. Rob Hood is asking, if we hold that, is the bull market still intact? He thought the previous breakout was from the 1576 level, and who knows if we'll ever get that low.
Yeah, I don't know if it will get there. And I'm not saying it definitely will, but if you understand volume profile or market profile, there's high chance of going to test high volume area if it breaks below a low volume area. So the low volume area that it needs to break is going to be in the low 1700. So again, I'm looking for the break below the October low, goes down and tests the low volume area in the 1700s. And again, this is a macro move. This isn't just for a swing type move. This is a big macro picture. It breaks the October low, goes down and tests the low volume area in the low 1700s, goes back and tests on the upside to the October low and holds as resistance to form a macro lower high. And if that's the case, it's going to go down and test, or have very high chance to go down and test the next high volume area, which is in the just below 1600 but above 1500. So in the 1500. So it's just the odds will increase for that to happen. I'm not saying it will, but if you understand volume profile, you look at a volume profile chart, you'll know if it breaks a low volume area, a key low volume area, most likely it's going to go test the next high volume balance area, which will be in the 1500s.
Okay, we've been on the line with Ethan Premock, stock index future and equity options analyst strategist at Hamzei Analytics. Joins us today, giving us his outlook on the S&P futures as well as some individual issues. Ethan, thanks for joining us. Have a great trading day. We'll talk to you again soon.
Very good. Thanks a lot.